Good morning. Welcome to the morning market briefing. Today is Thursday, May the 7th, 2026. We have a very special guest today. We have junior fixed income analyst Hannah June Russell sitting in on the call. She's busy taking in the latest data. An episode of Tumbleleaf, which is a very wholesome, but I would argue extremely boring kids show, but it's much less erratic than all of the other weird kid shows. So she's learning about something right now. It looks like I can't really tell, caterpillars or something are moving around, but it's claymation. It's very nice. So if you're tired of Bluey, you should try Tumbleleaf. Somehow it's more entertaining and yet significantly less so. Lots to get into, TK. Super producer Hicks is out today, so we would call him mediocre producer TK getting the call rolling, and now he's taking a seat. Let's get into it. What do we got?
Starting off, we got a little bit of insider trading going on. Surprise, surprise. Not from the oil markets this time, but lawyers from top M&A firms have been providing tips and big deals to an insider trading ring that's been making tens of millions of dollars in illegal profits, which honestly really isn't that much money. It was a big story, but I mean, $10 million is, if you know what's going on, you should be making a lot more money than that.
Yeah, there's also been, I was just reading, so Paul Krugman, who people who watch financial news would know is he's a teeny tiny bearded crybaby economist who is constantly calling for the end of the world, and basically he's just the worst. So look up a picture of him. As soon as you see him, you'll think, ugh. But he just put out on his Substack alleging that this is all a grand conspiracy within the Trump administration to enrich themselves, that there are oil futures being traded prior to announcements based on the war in Iran, and that people are making substantial amounts of money. Now, there is some evidence that there are large trades being made, but that happens all day, every day, and you're pretty lucky if you hit them. So, TK, I don't know if you have any thoughts on that, but I would say the oil markets especially are one for widespread speculation, people taking huge bets one way or the other. And I think that it's no small, it's something that happens all the time. I mean, with oil at $115 a barrel, if you take a massive bet that it's going to come down to a much lower level, the cost of that is actually pretty low because you're so far outside the money. So it's like you could make a big bet and lose money, and it wouldn't be that much money because the cost per contract on something like that is actually very small. It's pennies on the dollar. So you're making very small bets to make very big money if something very major happens. I mean, this is the Nassim Taleb playbook, which is to buy, huge out of the money options so that if something catastrophic happens, you make a ton of money when everyone else loses a ton of money. So do you think this is a grand conspiracy to enrich the Trump administration, or do you think this is just people speculating on a very volatile oil market?
I mean, I would say not necessarily people inside the Trump administration. I think that actually Trump's advisors are actually pretty horrible investors. I mean, Pete Hegseth knew the war was coming and tried to invest in defense stocks and actually lost money. So
yeah, that didn't work out so well.
Not a lot of talent within the Trump administration. I don't know. But at the same time, I mean, it's a lot of these news organizations that put out these stories that are basically driving the price up and down. I mean, it's likely a lot of insider tips from them before stories as well.
And it's not like these news stories don't break before stuff actually happens. There's always the rumors that XYZ is going to happen. I mean, they did it the other day with the Anthropic Goldman Sachs deal. They were like, this is coming together. There was a front page article about it. But the deal had not been announced. It didn't get announced until 3 or 4 hours later. But it's not like there wasn't any information that got out. And you're saying that Anthropic's team is full of leaks and they're trying to enrich themselves on Goldman Sachs stock. Because, I mean, the information was somebody said something to somebody. There's a ton of people involved in the war. You could argue that it's a possibility that somebody from Iran made that bet because they knew that was going to come out and they were hoping to make some money. I mean, it's not, it could be anybody involved. It's not just, a grand conspiracy, but people make bets like that all the time. And when you're trading futures like that, oftentimes the allotted money you put out is very small, and then you can make a fortune based on the change in price as long as it's significant and towards your direction. And if it moves the other way, you just, you decay and then you have no money and it just goes away. So this is why Nancy Pelosi makes lots of money, because she's not trading stocks, she's trading options. And
she's good.
And she knows what's going to happen. So that's very helpful for her in a similar vein. So Moving on, let's get into GameStop. This is the story of the week. This is the one I'm pretty excited about. But we had another interview with Ryan Cohen, this time a little bit more engaged, a little bit more nuanced as to what the deal is. TK, what's your read on it?
I mean, so he had one, like we were talking about earlier, with like a YouTube channel with like two guys that was kind of weird, similar to the CNBC, but not as vague. But the Fox one definitely was a different cadence. Came on, still not a lot. I mean, I think the Fox guy probably should have pushed back because I don't think he actually really knew how these deals work. So when you have a deal like this where you're putting up equity, you have to issue a lot of shares of your own stock, which in turn dilutes the value of your stock. So this is not investment advice, but I would completely stay away from this, especially if you're, and I would vote a proxy as an eBay shareholder to not do this because this is probably not in your best interest.
Yeah, the person who makes the most money on this is going to be Ryan Cohen.
Oh, yeah.
And that should be the most notable thing. There's been a lot of memes and things going around about, you know, like I'm going to go walk out of here and try and buy Starbucks outright, despite the fact that I only have so much money and it's worth a lot more than that amount of money. And that sort of seems to be the meme is they're like, oh, this guy's an idiot. But he's not an idiot. He's trying to enrich himself at the expense of the shareholders, because no matter how much he dilutes the shareholder to get this deal done, he will then get a massive number of shares regardless of the price, and he will actually get nice and topped up from a net worth standpoint.
Well, the GameStop board are just they're just the dumbest people ever. How would you have a pure equity stake and then no total shareholder return clause within? I mean, this is like dilute the company and fake the market cap 101.
Yeah,
so
I mean,
I don't know how they even allowed that.
But the reason they're allowing it is because they took over the board with him during the meme stock thing and installed him as the CEO, because they're all ex-Chewy people. So he started Chewy, sold it, then he used the money to basically pack the board on GameStop and install himself as the CEO, and then now he's put it to the point where the incentive is for him to make the market cap as large as humanly possible.
He's a good manager. I mean, I think he's done a really good job with GameStop. I think he would do a good job with eBay if he maybe just had a pure financing deal and bought it.
But yeah, this is why we look at management compensation, because what is he most incentivized to do? And dilute the shareholder, grow the market cap, and try and do insane acquisitions is what he's incentivized to do, and that's what he's going to do. So he's not incentivized to grow the company, get EPS going, turn the company around, turn it into a viable business, which he has done, but he's just using that as a tool to enrich himself. So pretty interesting, but I feel like nobody's talking about that piece of it.
Yeah.
Uh-oh. Looks like Tumbleweed is coming up again. We seem to have an internet issue with my phone over there. So now it's going to get wild now,
Some
folks.
commentary.
Strap in.
She's just setting you up for hybrid bonds. What are those and why are people buying them?
So hybrid bonds, there's been a huge influx of these in the market. And so it basically is a type of bond, and there's a number of different types of them. You can think convertibles, you can think fix and floats. But the idea is that you can basically issue debt that when the equity moves, you can sort of get out from underneath the debt. I mean, think of Tesla used to do this quite a bit, where they would issue convertible notes that had a zero coupon or a very low coupon on massive amounts of debt. And then when the stock price hit a certain level, it would turn to equity. So that just like Ryan Cohen, it would dilute the shareholder, but it would also get the company out from underneath that debt, because it would then go away. So you basically have a simultaneous payout of the bonds, or you wouldn't have to owe money anymore, but that would just turn into stock, and those people would turn into stockholders. Hannah, shh, cheese. She's taking a picture of me with my phone. Hannah, why don't you jump in on the Hantavirus outbreak? We haven't touched on this in the call. It's something I've been monitoring closely as chief medical officer of the podcast, and I'm interested to see where it goes.
Yeah, so Hantavirus, there's either two ways this can go. So it's a rodent-borne disease, and it can either be like through the lungs or the kidneys. The lung version, HPS, is much more dangerous, has like a mortality rate of up to 50%. So right now you've probably seen articles. The health authorities in the UK and the United States are racing to track down passengers from this cruise ship MV Hondius after an outbreak of a rare Andes strain of the Hantavirus resulted in 3 deaths and 8 confirmed cases. So this isn't like a super like viral infected disease. It mostly goes through like body fluids or directly from contact with the rodents. But there's an incubation period of 8 weeks. So the passengers on the rest of the ship are being quarantined in military hospitals right now as the ships head to the Canary Islands.
Yeah, it's pretty strange. I've been doing some deep large language model research of the Hantavirus, and it basically seems the only way you can get it is to basically eat infected rat poop. So
yeah,
I don't know what these people were doing
there's a lot of people
on their journey to Antarctica, but somewhere along the lines they decided to just chow down on some disgusting rat feces, which I mean, can happen. I've watched plenty of episodes of Alone, which if you don't watch is an unbelievable show on, I think it's Discovery Channel. They always, a year later, they always put it on Netflix, which is where I watch it. But you see people who are trying to survive in the wilderness, and they catch a bunch of fish and freeze them and stick them under their cabin in the Antarctic, and then someone ends up finding them, using them as a bathroom, and then they're like, well, I could eat this, and then ultimately that usually results in them going home due to gastrointestinal distress. But it seems like these people weren't in that survival situation. They're
gonna have to investigate the chefs and the cooking crew, maybe.
Yeah,
I don't know how else you're getting. I mean, that's a lot of passengers getting.
Yeah, things I'm not going to do is go on a trip to Antarctica, because apparently that's how you end up dead. So, moving on. What's going on with Iran today?
Man, I feel like I'm in a time portal from exactly 2 weeks ago. So we're waiting on a response from Iran. It's expected the next couple of days, probably via Pakistan again, on the 14-point peace plan. If it sounds familiar, it's because it's basically the same 14-point peace plan that we had a little disagreement with a couple weeks ago. There obviously is, I think from the Trump administration perspective, they're thinking we've kind of weakened Iran. Maybe now they're going to be more willing to turn over their nuclear materials and see this deal. Trump wants this deal done before he meets Xi Jinping next week. But from my perspective, anytime we've had a deal circulating with the same sort of talking points, I think that Iran is more desperate now, and they just would not ever give up. I don't think they would give the U.S. this kind of win right now. I think they're worth where their mind's at right now is they're willing to suck this up for a little while until they get something better. And then another thing of that too is Israel started bombing Lebanon yesterday, which was a big stipulation within one of the original agreements. So I think violation of that ceasefire is also going to be a talking point for the Iranian officials.
Yeah, we need to put Israel in a box. We got to say, hey, stop. Just chill, man. I mean, they love to go on offense.
It's the UC's I fire.
Yeah, we need to, I don't know. It'd be great if this is happening. I mean, obviously, it seems like the U.S. has more leverage now because they continue to just, turn the key on the blockade. There's reports of widespread, inflation on food and hardship of the actual normal people. And I think that if you look back historically on what wins wars, it quietly is the population at large that is under the most pain, whether it be, World War I or II. I mean, ultimately we won World War I or II by dropping bombs on civilians. And hopefully this is a more effective strategy of getting people to be like, hey, we don't want to do this anymore, by just making things very uncomfortable as opposed to vaporizing. So, but I mean, we'll see. It could develop to vaporization. We'll see how it goes. Let's run through some earnings and then let's wrap up. This has been very chaotic, but we seem to be chilling for now.
So kind of getting towards the end of the big earnings season here, but McDonald's came out this morning, same store sales, which is like comparing similar transactions at similar stores, was up 3.8%, was a little below expectations, but the reason the stock is up 3% this morning is they beat revenue and profit expectations. We talked a little bit about last week on Domino's, where right now with the customers spending a lot of their paycheck on gas at the pump, a lot of these companies were really driving new value menus, lots of deals to try to drive their same store sales via transactions rather than increases in price, which I think is actually overall healthier for the growth of the business as well. So Domino's is an example of a company that failed completely by cutting their prices and seeing a decrease in volume. McDonald's, on the other hand, big driver in the United States was they had this new value menu. They had this new Big Arch Burger, which I haven't had the chance to try myself, but I think it was pretty popular. I think those two items really drove big ticket orders within the United States. So not even like a ton of traffic, but people were thinking, man, I normally get 2 double cheeseburgers, but it's 3 for the price of 2. Might as well get 1 more.
Nothing says healthy economy like eating more McDonald's instead of more expensive McDonald's.
Yeah, and the sell side on this was absolutely, I mean, there was a lot of bears going into this. I think the numbers were pretty skewed for.
I mean, they fumbled the ball big time the last couple of years, but I think they're starting to figure out where their money is actually made. So that's net positive, I think. We keep an eye on this guy. I think it could be similar to Starbucks, where they're starting to figure out what they have been doing versus what their core competencies are. So,
yeah,
it
still pretty
remains
high
to be
margins
seen.
Too. I mean,
McDonald's is a great company. I mean, they're quietly more of a real estate company than anything. I mean, that's their real bread and butter, but they still have to sell hamburgers. So,
then moving on to Shell. So another company where we're seeing multiple companies where we see double profit sequentially is just absolutely wild. They are down this morning 2%, even with a strong earnings beat. They beat earnings by 14.5%. But actually, the primary driver of their revenue was actually their traders of oil. During these volatile markets, these traders are actually making a lot of money. Shocker. And then these did offset like big disruptions, I think like 10% in their capacity within Qatar. So the reason the stock is down today, though, is they had a pretty big buyback planned, and they switched a portion of that into a cash dividend. So this is the company, I mean, in a way, saying
our stock
our stock's expensive. We don't want to own this stock, so we'll give you some cash instead. So I don't think that was very reassuring for shareholders, and the capacity issue as well.
I mean, I think that's good financial management, though.
Yeah.
I mean, if your stock is expensive, you don't want to be doing buybacks.
Yeah.
And
if you take a 2% hit because of the headline, I mean, you don't want to take a 15% hit on losing money on your own stock. So.
Yeah, it's cheaper to pay that out as a dividend over time, and you still have that flexibility to use the rest of the cash for something else as opposed to just retiring stock. So I think that's shrewd financial management, I think.
And then moving on to the competitor of Uber we saw yesterday, DoorDash up 10% this morning. Record membership of their Dash Pass. Uber has a similar model to this too, but it's basically you spend like $13 a month. We get rid of some of the fake fees that we put on top of your order. So record membership for that. They do have a gas relief program that people thought was really going to hurt margins. It cost them $50 million this quarter, and it's planned to cost them $50 million next quarter. But margins weren't actually hit that much. Revenue was up 33%, and adjusted EBITDA was up 28%. And then recently they had this Deliveroo acquisition, I guess within the last year. This has really been successful in driving their global markets, which was a big talking point from them.
TK, I'd be interested to hear your thoughts on this, but have you found that when you've ordered a lot of food on DoorDash that you've found gas relief?
Just the opposite.
So hey, before we stop, along the lines of the Uber Eats thing, yesterday I walked out to the pit where the young boys sit, and Ryan and TK were actively gaming the Uber Eats discount situation, and they were on their way to pick up some panko chicken. Walk me through your scheme yesterday and what the actual deal was.
So yesterday, the boys were thinking about lunch. We're like, why don't we just pay half the price for lunch? Thank you, Uber. Go in there, go on the offers, buy one, get one panko chicken meal. Traditionally like a $15, $16 meal. It's $8. Actually, it was less because I went in there. I had Uber had gifted me some credits from all my Uber traveling over the past couple days. So I had a couple dollars of Uber credits to put in there. And then they were just so gracious. I have the Uber Dash Pass. They still think I'm a student at the University of Utah. So nice. I get like a $5 Dash Pass or Uber Pass. So, I mean, it ended up being like $14, $15 for $35
meals
meal.
For adult men.
And that's just, yeah.
Man. This is something I'm interested in. I'm a big fan of not paying full price.
I don't know how it's profitable. I don't know how. I think that there might just be so many people that go through DoorDash and just get roboted into what DoorDash wants them to buy. But I don't know even how is your margin up that much? I don't even know how that's possible.
I don't want to say that my feelings were hurt that the boys got lunch without me, even though there's only like 4 of us in the office this week. But
that's the only disadvantage. You got to have a. When Andrew comes back tomorrow, you guys will have to. I guess we got lunch, but
yeah, I mean, you can't. I guess you have to have a separation of powers. You can't be palling around with the young boys. You can't have them fraternizing with you. You got to have a healthy separation between the boss man and the underlings. But listen, if you're trying to curry favor, pun intended, hook the boys up for some lunch. We'll wrap it up there. The burritos have already been delivered. Hannah's been very quiet here for the last 5 minutes of the call. She's very locked in to her tumble-leaf research. And we will see you guys tomorrow. Big jobs report tomorrow. I think Andrew is back tomorrow. So hopefully we'll have more of a normal call for the first time in a couple weeks. But again, questions, calls, concerns. If you want to complain about TK not speaking loudly, I think he did a good job being a big boy and speaking from his chest today. So I think we solved that problem, but we did have a little bit of feedback. So thank you for your constructive criticism. He's a better man for it, and we will see you tomorrow.